There are only two kind of investors out there, crazy and passive. And I'm going to explain to you what I mean by this, so let's jump right into this one. Welcome back, passive income investors. Today, I was just getting out of a meeting, and I keep running into this thing that drives me absolutely bonkers. And it's crazy investing versus passive investing. And you're probably thinking, what do I mean by that? Well, there's two different kind of investment classes that I believe exist. There's literally crazy investing, and I'm going to tell you what fits in that class, and there's passive investing, right? So crazy investing is those companies that you buy that are so outrageously expensive, you're buying them on the assumption someone else is going to pay more for them in the future because most of the pricing of their company for future growth is already priced in. And this could be anything from, marijuana stocks, Tesla, Bitcoin, all of those stocks. Now, I'm a victim to this as well. We all have been victims to this. All of us get an irk inside to buy a fast growing wave or some kind of fad that is going on. Like, again, Bitcoin, guys. I know a lot of people that made a lot of money on Bitcoin. I know a lot of people that lost a lot of money on Bitcoin. I made almost $30,000 trading marijuana stocks when they were all fire, guys. Like, you can get really lucky with this, but at the same time, where most people make most of their money is in passive investing. This is stocks like Apple, like Johnson & Johnson, companies that pay dividends. Did you know, and if you are watching this, there's a good chance that you do, that investing in dividends have usually, they do have a higher return than the basic index fund. And I don't know why this is, but if you look up the charts, it just seems to be the facts that you can slightly outperform the markets by buying basically individual dividend stocks, if you're buying good ones anyways. Now, the reason this drives me crazy, now I own Tesla, I bought it at a horrible time. I'm buying it as a long-term hold. I'm gonna hold on to this thing for a long time. It's going to take a lot for a company like this to shoot up. But I was watching a video yesterday, I think it was PPC Ian, and he was going on about how a lot of us get caught up, the millennials get caught up in buying stupid stocks like Tesla. And of course it is a horribly stupid stock to be buying. It looks like it's a car company that doesn't produce more cars than any of the other companies, but it's worth more than them. And you're definitely paying a lot for future price. But this is a company with some crazy potential, and it might take a decade, it might take 15 or 20 years for its full idea or its full goals to come into fruition. Now, that's even to say if it's going to happen. It might not even happen. Now, I definitely overpaid for Tesla. My prices are right here. I don't mind showing you guys. I only bought a little bit. I don't buy investments that don't cash flow a lot. Like I'll barely buy any non-cash flowing investments. That Tesla right now is my only stock that does not pay a dividend, and it'll probably be the only one I own that won't pay. But then again, you got to remember, guys, PPC Ian also, I know he wasn't trying to batter up the Tesla owners too bad, Tesla stock owners, but he at the same time talks about owning Bitcoin. He owned Bitcoin. I thought Bitcoin was insane. The same time I was buying marijuana stocks like Canopy at $3 to $8 a share, he was probably buying Bitcoin and making a lot of money on it. But at the same time, I thought Bitcoin was insane when it was worth $2,000 a coin, or 1 and 0. It was insane to me but then again, I was looking at Ponzi schemes like Gladiator Coin. Depending on, another person might tell you that this is called growth investing versus, I don't know what else, because dividends are still growth stocks in my opinion. If you look at a stock like Johnson & Johnson, McDonald's, Apple, these stocks all pay dividends and have had insane growth rates. You can't tell me they're not also, I would consider growth companies. It's a hard thing to define, guys. Most people say stocks that don't pay dividends are growth companies because they're better off investing it into the company. But at the same time, you're going to notice that a lot of people like Apple that mainly do share buybacks and not dividends, they do it because the CEOs and the people that own the company own shares in it. And usually there's a lot of self-motivation to do share buybacks over paying dividends, especially when it comes to shareholder value. In my opinion, stocks, at least Apple, pays somewhat of a dividend. I think every stock should pay a dividend, even if it's a small dividend and you're buying it for growth. And the reason I say this is not always the managers are smarter than you managing the money. And if you like the company that much, I'll do my own share buyback. I'll just reinvest the money, but I should have the right to decide with some of the income that comes from the company what to do with it. And it also humbles the CEO a lot when they have to pay out dividends. And I've noticed companies that have sustained higher dividends over times, that the management, their philosophies and the way they function around the company are a little different because their main goal is to sustain that dividend, because usually, again, they'll hold a large amount of shares in the company and they want those dividends. Like it forces them to want to work for the dividend, and it also makes them, I find, be a little bit more diligent because again, it's also feeding them, and it's making that huge salary for them. I don't like companies like GameStop. I made a video a little while ago on GameStop, and it's been tanking, guys. GameStop is a horrible company right now. I recently visited one to get an Xbox controller for my PC, and like they were just, you could just see that they're not doing that well. They've been falling apart, but the CEOs, guys, they're making millions of dollars. Like, it's insane how much money these guys are making off what is left of GameStop, and it's not fair to shareholders. I don't think the CEO should make more than the shareholders. It doesn't hold anybody accountable. So essentially, if I'm getting paid $1 million, but the stock drops 50% every year, well, if you own stock, you've been losing money left, right, and center, but I've been pocketing all that capital, the rest of the capital that this company's nursing. I keep finding, especially with marijuana stocks or like Bitcoin, when I make fun of them, because again, these stocks are pure speculative plays, like gold. Say what you want about a hard asset, but if it doesn't cash flow you money, again, it's like buying real estate. If you buy $1 million house and you never rent it out and you think you're gonna make money on the equity going up, you're insane. You're gonna pay property taxes year over year, you gotta pay utilities. It's crazy how much it's gonna cost you to maintain $1 million home. But if you rent that $1 million home out and the mortgage and the utilities cover themselves, and all of a sudden your equity's going up for free. Like your equity in your home is just becoming worth more and more, and you're not paying for it. I mean, it's common bloody sense, people. Like, I don't get why people get so worked up when you make fun of a company. And it's not even really making fun of it, it's just factual information. I saw a comment on the video I made literally yesterday about Hexo, and this guy was just like, oh, like make fun of Hexo, but you know, you own Canopy Growth Corp, the largest one. And it's like, yeah, I do own Canopy through Constellation Brands to like cushion myself, because I'm terrified of the marijuana market right now. Like, it's crazy that a company like Hexo could be worth $1 billion something and make $4 million in revenue and lose like $100 million. Like, they're so far away from any kind of valuation. Just to put it in perspective, for that company to be worth like the $1.5 billion it's worth, it has to make $50 million a year profit. It has to profit $50 million a year. Like, that means it needs to be pushing like what, 70, 80 million in revenue? Like, think about those numbers. Like that, you can't buy a company like that and expect to be trading it on its fundamentals. No, there's something like 60 cents to produce a gram, which is the cheapest amongst all the marijuana companies. But at the same time, guys, come on, get real. There's so much going on. Watch the video. You guys can watch the video. It's just the last video I posted. Watch. You can tell me what you think. I like doing the deep dives. You guys seem to enjoy them, but I can't get over these people, especially with Bitcoin. They get so caught up in this idea that it's going to be worth like $1 million. It blows my mind, because you're gambling, and to think you're not gambling, and then to get so cocky with yourself that you think this is going to change the world, and it might. There's nothing saying it won't, but guys, take it with a grain of salt. I bought Tesla when it was way overvalued. I should have waited. I could have bought it on a way better dip. And now I'm like, if I sold it today, I'd be down money. And there's a good chance it's going to take a decade for that to ever come back. And a lot of people are buying it, like millennials like me, who think it's going to be worth like an arm and a leg in 3 to 5 years. Like, a lot of people in these videos think this company is going to be worth like a $500 billion market cap in 5 to 10 years. And it could, but it's so unlikely in the next 3 to 5 years that Tesla's worth that much. I just don't see it. When it comes to speculative plays, you do not need to put a lot of money into them to make a lot of money, and it'll mitigate your risk. What I mean by this, guys, is when I made almost $30,000 off Canopy Growth Corp, I only bought 1,000 shares worth. I put like at $8 a share was my average buy price. I had 1,000 shares, so it cost me like $7,000, $8,000 for that 1,000 shares. Not a lot, and I was buying it when I knew there was a big wave coming, and it was on a gamble. I was gambling with that play. Like, I literally, in my mind, I knew that they were undervalued. They were already expensive to most people, but you know, legalization hasn't come yet, and it is coming, and this is the largest marijuana company currently on the planet. I'd be stupid not to buy at least 1,000 shares and see what happens. And it friggin' exploded. It went all the way up into the 20s. I started selling in the low 20s up to the 30s, and I could have held on. I could have made 60 grand, guys, but then I would still be gambling, and I don't like gambling. It bothers me. So anytime I know I'm making a gamble and it's out of a feeling and a speculative play, because Tesla produces an intense feeling for the future. Elon Musk has done an amazing job generating this imagination for the future. But today, that imagination is just an imagination. It doesn't exist. Like, we're not going to Mars yet, guys. Mars has nothing to do with Tesla themselves. And Tesla as a car company is a long way from meeting production goals, like even matching GM or Ford. So take a step back, guys. Take a friggin' breath and understand what you're doing when you're taking on this speculative risk and you're buying crazy stocks. A lot of people look at my portfolio and think I might be nuts, because I'm not only am I buying individual stocks with large sums of money, I'm buying usually high risk, low cap stocks like GEO Group, high risk REIT. It's very volatile. Companies like MO, dying tobacco companies. People think I'm nuts. Those companies are dying, but I love them. Companies like Constellation Brands, a beer company, getting involved with marijuana. Like, all of these companies are really high risk, but they fit and they mitigate my risk portfolio in my mind, in my morality. I understand certain things, I think, really well, and I stick within that realm. And when I stick within that realm, I make a lot of money. I have in the past. I think I will in the future. And I'm going to continue on this path so long as I make money. But at the end of the day, I always stick to this one rule. And I mentioned this in the past, and you all should as well. If you do not beat or match the S&P 500 index funds, i.e. SPY on ticker symbol SPY or ticker symbol VOO, Vanguard 500 index fund. These are the 500 largest companies in the US. We all know what they are. If you cannot benchmark, even your financial advisor, if you don't invest for yourself, guys, make sure that your financial investment advisor is making you equal to or greater than the S&P index funds, because that's the benchmark, and you should benchmark that for yourself. If 3 years goes by and you're losing more money or making less money than the basic index funds, guys, you need to look at yourself and say, I'm doing something wrong and I need to stop. Don't be one of those people that ruins their lives, lose all their money, and think stock market investing is a horrible idea. If you cannot beat the markets with individual stock buying, don't do it. Simple. Bam. Realize it. I've looked at myself. I've said the same thing. If years go by and I start losing more money than the basic markets make, I need to look at myself and stop what I'm doing and go back to the basic fundamentals of investing, which is stick to the index funds, because they always almost guarantee an 8 to 10% return and have since inception, with the odd exception of a few years. I mean, you could be up 20% one year and down 20% the next. 2018 was flat, down, and now we're back into the game where everything seems to be rallying back. It's a hard thing to debate, but over the long term, because you can't be in this for the short term, and if you are, you're gambling, so make sure you're gambling with a mitigated risk amount of money. Don't get crazy on me, guys. But again, I hope you enjoyed this video. I'm kind of ranting on. I'm going to stop now. It's been a long video. I'm just getting back from this meeting. I'm all pumped up. I'm just excited. And I can't get over these people that get so caught up in their investments. You can make fun of me for owning Tesla. I mean, people get their panties in a bunch. I can't get over it. When you talk about certain investments and why you don't think they're good investments, the people that own them think you're nuts and they lose their marbles. It's so odd to me. Like, I own Tesla. I'm down on it. Make fun of me for it. It's a stupid buy. It was a dumb buy. I overpaid for it. I get it. But in my mind, it's just something small. I'm going to hold on to it forever. I can justify it to myself any way I want, but I definitely overpaid for it. And I'm fine with that because I used a very small amount of money. It's mitigated risk, and I don't plan on buying much more of it right now. I want to, but I still got to keep my dividend track on a goal. And when that's on goal and I get a bit extra money, I'll use it into Tesla, because I still wouldn't mind owning a little bit more of it. Because like I said, if it's as good as everyone says it is, it'll make me enough money to be able to afford one of their products down the road, I'm sure. And if not, company goes bankrupt. It was fun while it lasted. I learned a lot. I mean, it was very inspirational. And if we lose that inspiration, it's going to be very depressing. But other than that, stay cool, guys. I hope you enjoyed this video. Stay awesome. I look forward to talking to you tomorrow.